Crypto is a game of attention. Wherever a lot of people look at a certain asset, where a lot of people make research about an asset, we tend to see prices going up. Whenever attention moves to the next token, token B, token A, it tends to go down in price. Now what's interesting about being a YouTuber is I've got direct views into how attention is evolving. Because I've covered the Pump token regularly here on this channel. And the first video published 20 days ago was an above average video. It outperformed the average video by 50%. So the average video being here in gray, and that particular first Pump.fun video here, this blue line. Another video 5 days later followed. Again, it slightly outperformed, but not by 50%, only by 13%. And here's a follow-up. It slightly outperformed, but really barely. It was pretty much an average video. And here's the recent public analysis of the Pump.fun token. This one now finally underperformed the average video. So it seems quite clear that the attention on the Pump.fun token is going down quite constantly over time. And so it's no real surprise that the Pump token relative to Solana also underperformed. Now I always like to look at relative valuations, right? Because when Bitcoin, Ethereum and Solana is going up, then all the altcoins go up as well and vice versa. When we divide the token price by its benchmark, so in this case Solana, because Pump.fun is on Solana, we then get the idiosyncratic movements. So what is the Pump token itself doing, independent of the macro environment? And this tended to decline quite constantly. So over the course of 2 weeks, we saw an underperformance of 70%. But since the end of July, so in the last 4 to 5 days, the decline has stopped. So what's going on here? Is this potentially a buying opportunity? What's causing the recent outperformance? Has Pump dipped? And do we have now a lot of upside potentially? So the potential upside could be more than 100%. Now to answer that question, we have to first figure out, why did Pump go down in the first place? I think there are two major reasons for the Pump token having not performed as expected after launch. The first reason is the long-term unlocks of Pump. So over time, the circulating supply of Pump will increase. There haven't been any unlocks yet, but just to look in the future, just in anticipation, people are rather cautious and don't buy that much Pump. So that's reason number one. Reason number two might be the declining usage of the platform. Since beginning of the year, the Pump.fun ecosystem rather shrunk in its usage, and many people lost with those meme coins. Pump.fun is the leading meme coin launchpad on the Solana chain. It's a player versus player game. There's no value creation here. And there are some players that are better than others, that have some more skill. And of course, crypto trading is both luck and skill. But if there's just a little bit of skill, if the trading continues for long enough, the capital concentrates towards the people that have more skill. So the luck cancels each other out over time. Now here's the tokenomics of the Pump token. So how is the supply developing over time? We so far have not seen any unlocks. We have been steady at 430 billion tokens, but at one point this will inflate to 1 trillion tokens, or 1,000 billion. And here's the usage of the platform, at least in terms of deploy transactions. This peaked at the beginning of the year and since then declined very, very quickly. We went from 60,000 deploy transactions on a single day to now only 6,000, so a drop of 90%. There are some numbers around the Pump.fun ecosystem that do look somewhat bullish. The total value locked on Pump Swap, for example, this year is now measured in US dollars, but measured in Solana, it looks even better. It's quite constant growth. So the trading that used to happen on Radium is now moving to a dedicated platform. But then the question is always about valuation. Is it okay that the Pump token is now valued at roughly $1 billion? Is this a fair valuation compared to the competition? What we're seeing here is the meme ecosystem. Now most of those tokens are just meme coins. They are not launch pads with their own infrastructure. But still, it gives us an idea of the potential upside. So Pump is at 1 billion. If it was to double, it would beat Bonk. If it was to triple, it would also beat Pengu. And with that plus 200% or the 3x, it would also be the largest of the meme tokens on the Solana chain. Everything above here, that's either its own chain, Dogecoin, or it's on the Ethereum chain. The Pump token clearly stands out, right? Just have a look at the performance in the last 7 days. All other meme coins went down, but the Pump token went up. So this appreciation here, again, as we've already seen with this relative valuation chart, is idiosyncratic. It's specific to Pump. Pump is doing better than the rest in the last few days. It's now the second largest trending token on the Solana chain if we just look at liquidity. Number one is Fartcoin with 20 million of liquidity. Pump has 15 million. Yet, despite its size, we've only seen 500 wallets interacting with the token on-chain in the last 24 hours. There were much more buyers than sellers, yet the price went down. So the sellers tended to move much more capital than the buyers did. On-chain, we've got now 62,000 wallets that hold at least a little bit of Pump. Now, some wallets might hold hundreds of thousands of dollars worth of the token. Other wallets might be arbitrage bots that just hold a few cents. So we have to look at this in a bit more detail. Over here, we've got the number of first-time traders versus recurring traders over time. This was highest when the token launched, then went down, and then recovered slightly. We are now stable. The number of token transactions has a very similar trajectory, but the trading volume seems to not have stabilized that much. So on the left side, it's in US dollars. On the right side, it's normalized to 100% to show the segregation across the different wallet cohorts. Now, small retail is all the wallets that have less than $1,000 worth of Pump. Medium-sized retail is up to 10,000. Large retail is up to 100,000, and the whales is above 100,000. We can see that over time, while the trading volume is going down, the small retail investor takes over more and more of the trading volume, relatively speaking. We see the same development in terms of the number of holders, so the number of retail investors versus the number of whales. The way you make that distinction is by looking at how many Pump tokens does a certain wallet hold. So for the chart on the left, it's at least 350,000 Pump tokens. At the current price, that's roughly $1,000 worth of the token. In the middle, it's a 10x from that, it's $10,000. On the right, it's another 10x, so it's $100,000 worth of the token. We see how small retail tends to accumulate again. Small retail is buying the dip, but the whales aren't buying as aggressively. So this consolidation seems to be mainly retail driven. Isn't that interesting? But we've already seen how the number of wallets that currently interact with the token on-chain is rather low. So really, most trading currently happens on the perpetual future, on the levered bets on the Pump price. In the last 24 hours, we saw 48 million worth of trading volume on Gate.io on the spot market. But compare this with the perpetual futures market. Here we had 553 million worth of trading volume. And that was on MEXC. So really, the price discovery now happens on MEXC on the perpetual futures, not on the spot market anymore. The price gets pushed up via the perps and then arbitrage bots balances out with the spot market. Most people that buy the Pump token via perpetual futures, via levered bets on the price, tend to bet on a rising Pump price, because the funding rates are currently slightly positive. So the longs have to pay the shorts in order to get more exposure. The trading volume on the perpetual futures has not declined in the same manner as it did on chain. The trading volume on the perps is relatively constant. And there is a lot of connection between the open interest on the price, so how many bets are currently made, versus the spot price. When there's less open interest, the spot price tends to go down. But open interest has stabilized, and I expect this actually to go up again. Thus, with more leverage and more open interest, we're likely going to see an increasing Pump price. So buying this dip is probably not the worst idea in the world, at least short term. Of course, long term, there's always the issue of the tokenomics, but there's already been an announcement that the airdrop, the planned airdrop, is going to get postponed just to stabilize the Pump price. Very, very long term though, right? When we talk about next year, there could be more speculation around Pump, because then the team and the existing investors can start to cash out. And then the question is, will there be enough short interest? But that's a topic for another video. I will, of course, continue to make regular updates on the Pump token as well, right? So feel free to subscribe over here. A clear shift in crypto has happened. Bitcoin is close to the all-time highs, yet the interest, the search interest, the retail interest is very low. Bitcoin gets supported because of Wall Street purchases, not because of purchases by retail. Nobody is searching for crypto or for Bitcoin anymore. The market is consolidating. The capital is concentrating towards a few winners. That's usual in any market, right? The vast majority of assets, the vast majority of players tends to go down, and there are a few winners. The winners take most. What we see over here is the performance of the smaller altcoins in the last year. And Bitcoin doubled in the last year, but most altcoins went down. And here's the thing, most people try to find the few assets that still do okay. They try to find the next Dragon coin or the next go-to. But how likely is it to get proper allocation to those assets and not pick any of those other red assets and burn all the capital? The odds are clearly against us. So this approach is clearly problematic. It's not easy at all. The approach of timing the macro environment is also not that easy. This is Bitcoin over time, right? And of course, it does make sense to buy Bitcoin after it has dropped 70 or 80%. That's the best time to get in. We are very far away from this, unfortunately. The issue is also nobody wants to buy when we are depressed, because there's always a convincing story why Bitcoin will go to zero, why crypto is doomed, while nobody will get into the market again. We are far away from this, but in general, right, riding the macro is also not the easiest. Trying to find the next 10 or 100x altcoin is a problem. Trying to buy Bitcoin when it's extremely depressed is also not that easy. I do think there is an approach that's comparatively easy, where the odds are actually in our favor, not against us. That's by using the market structure to our advantage. This market structure here, right, that all of the altcoins go down all the time. Why do they actually go down? The answer is token inflation, right? It's new tokens that hit the market. It's the insiders, it's the venture capitalists, it's those paid influencers that get tokens, that maybe get them unlocked over time, that then simply just dump on retail. That's why all the retail investors lose over time. They simply get dumped on by the smart money. Why do venture capitalists like Andreessen Horowitz like crypto? Why do they invest in it? They do this because they get into the projects very early. They've got a very tight network. They've got a lot of capital to play with. They get in early and then they sell off and dump on retail. Or why are there so many compromised influencers that take money or tokens of a project to promote a certain cryptocurrency? This here, for example, is BitBoy Crypto, right? A dedicated review. He asked $35,000 for that. The reason is simply conflict of interest. It's profitable to do this. I, by the way, never took any money from any crypto project. I also will never take any money from any crypto project. I want to make my money in crypto in a different way. And that is through building skills that help us to distinguish the noise from the actual signal. And again, it's all about taking that market structure to our advantage. There is a way to make money with it. When a token like Balancer inflates in supply, when the supply is growing and growing because the users of the platform get tokens, because the early investors get token unlocks and they dump on retail, when something like this happens, then as a consequence, the token, of course, does worse compared to Bitcoin, Ethereum, and Solana. So this is now Balancer relative to Ethereum, and it just constantly is going down. But we can just flip this on its head. When we go long Ethereum and short something like Balancer, we see a chart that's not possible to achieve with any single bet on crypto, right? This is very little volatility and very constant growth. This is now a linear chart. Here's the same on a logarithmic chart. Balancer is not a cherry-picked example. The overall altcoin market works like this. This is the unlocks over time for all of the tracked tokens on this website here. So the website is Tokenomics.ai. This is the weekly unlocks across all the tracked tokens, and it's above 600 million per week most of the weeks. So if there's not at least $600 million coming into the crypto space in a particular week, we see the altcoins do worse than Bitcoin, Ethereum, and Solana. This is how those kind of charts develop. This is why we see red everywhere. This is why the strategy works so well. Again, instead of trying to find the needle in the haystack, it's much better to bet on the overall structure. When most people cash out, when Andreessen Horowitz makes money by dumping on retail, why don't we just get ourselves on the same side? I'm following this strategy for almost 4 years now. What we see over here is in light gray the performance I would have gotten had I just dollar cost averaged into Bitcoin. But instead, I did the relative valuation plays that I just described. And that's why I got the black line return. So this comes from an Excel sheet of my personal portfolio. This is monthly data, and it's got now 44, 45 data points roughly. I started this strategy with decentralized finance, so with borrowing and lending platforms like Aave or Venus Finance. But recently I do this with perpetual futures. So this started 2.5 months ago. I started with 40K and now it's at 60K almost. So that's almost 50% return in less than 3 months. I do not think that this will continue forever at that pace, but I do think in general this is a money-making strategy. The strategy has already worked for almost 4 years, and it also works with leverage on the perpetual futures. And so basically we just flip this thing around, right? Everything that's red over here becomes green. Everything that's green here becomes red. The odds are finally in our favor. We are not gambling on random meme coins, lose everything. Instead, we make money the same way how the insiders and the venture capitalists make money. We make money when the dumping happens. And so I understand the problem, right? If you followed other people like BitBoy Crypto and you trusted them and you've lost your money with them because you just followed whatever they said, and I do understand if somebody else comes along and says, follow my approach, that it makes sense to be somewhat skeptical. And so I was thinking about this. How can I prove that I'm very certain that this actually works? Here is the offer. Watch 2 tutorials in the premium membership. So this is one of them. It's half an hour in length, how to use perpetual futures on Hyperliquid to bet on relative valuations. And then there's the second video over here, which is at least equally as important. Risk management with relative valuation bets using Hyperliquid. If you don't know how to manage your risk, you've got a big problem with those instruments. But yeah, the offer is to just watch those 2 videos. Once you've done this, then I don't expect you to start trading by yourself already and find the best opportunity. This is only something for the people that have been around for a while. This is, by the way, a few trades that have been made by other members that are shared over here in the chats. I think it is much better to do a little bit of hand holding, as in I will share my favorite trade that you can enter with that strategy. So you know how to use the platform, you know how to set up the positions. I will share then what asset I believe has the most likelihood of performing in the near future. You will then enter the position, hold it for a month, and if you don't make any money, if you're actually in the red with that position, I will simply refund the premium membership for free to you. You don't have to pay anything for premium if you're not making money with that first trade that I'm sharing with you once you enter. Of course, besides that very first trade, I'm also sharing all the other trades that I opened. This, for example, was WorldCoin. WorldCoin has terrible tokenomics as well, and it underperformed Ethereum very consistently. But one thing after another, let's do the simple stuff first. Let's set everything up. Let's open the first trade, make that first profitable trade, make the first gains, turn ourselves around from being a constant loser to actually start winning. And then we can take it from there and become a bit more complex along the way. The premium membership is currently $125 per month. But again, I'll refund this in case you don't make money with that first trade. A link to premium should pop up directly over here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.